My guest today is Doug Marshall. Doug is a real estate investor. He's a commercial mortgage broker. He's a CCIM, and most recently, he's the author of Mastering the Art of Commercial Real Estate Investing, How to Successfully Build Wealth and Grow Passive Income from Your Rental Properties. Welcome back to CREPN Radio, Doug.
Well, thank you very much. I enjoy the opportunity to talk to you today.
Well, I've always looked forward to talking with you, and I'm excited to hear a little bit about your book today. Before we do talk about your book, if you could, for those listeners who haven't heard you before, if you wouldn't if you would just take a few seconds and share a little bit about your background.
Be happy to. I am a commercial real estate mortgage broker by profession. I've been in the real estate business since 1980. I've been a commercial real estate lender, either as a direct lender or as a mortgage broker, since 1987. I started my own firm in 2003, Marshall Commercial Funding. And about 10 years ago, I started investing in commercial real estate as well. So I'm on the lending side of the business, and I am an investor.
Well, that seems like you're on both sides. That's a unique perspective there. So, about your book, let's talk a little bit about this. And I guess the first thing I'd like to ask you is, what's it mean to master the art of commercial real estate investing?
Well, that's a good question. I think that one of the best takeaways that I've had over the years is that I find that my investors that I have had the privilege of doing business with, they really understand that investing in commercial real estate is more of an art than it is a science. We always think of crunching the numbers. And yes, you have to have a good understanding of the numbers for real estate. But reality is that it's a lot more subjective than objective. As far as being a successful real estate investor. And so that's the reason why I put in mastering the art of commercial real estate. It's not just crunching the numbers. It's far more than that.
I like it. With that, is there anything is there one thing that you've mastered as a real estate investor?
Boy, I don't know if I've mastered anything particularly well, but I'm kind of the jack of all trades. I understand the number side backwards and forwards, and I appreciate it. But each deal is different. The opportunities to make a good return on your money changes with the real estate cycles. I've learned a lot about dealing with people. When you have the opportunity to, first of all, as a mortgage broker, and you have these clients, you've got to help them along with their investments, but also as a investor and learning to work with other investors that are in the same property. I usually invest with 5 or 6 other investors, and so I've learned a lot about just how to get along with people and to try to be able to communicate in such a way that everybody's on the same page.
Gotcha. I'm curious, as both an investor and a lender, are there any stories in your lessons in your book that describe lessons you've learned about commercial real estate investing from the lender side as opposed to the investor side?
Oh, yes.
Yeah.
I have all sorts of stories on the lender side, and but I also have, since the last 10 years I've been in the investing side, I also have some good stories as well that really helps to explain some of the lessons I've learned many times the hard way on investing in commercial real estate.
Gotcha. I think one of the things that a lot of the buzz with real estate is that there's always the fast, easy money in real estate. At least that's what it gets played out in the press and kind of the buzz. Do you, in the book, do you provide any words of encouragement to those that are looking to start or have started and haven't realized the gains yet? Is there any kind of do you speak to that at all?
Yeah, that's a good question. I would say that investing in commercial real estate is not something that is a quick return. Yes, you can get nice size returns on your investments, no doubt about it. And I've been very fortunate over the last several years to see my real estate properties increase in value significantly, double, triple in what I originally paid for them. But it's to be in real estate, you have to have a long-term view. You shouldn't be thinking of it in the short term, like I'm going to flip this house or something to that type of thinking. It's more with I'm in this for at least 5 years, maybe 10 years, and I want to be proactive in managing my property during that period of time. If I do everything like I should, then I will see substantial gains and improvement in cash flow at the same time.
Gotcha. So, with the book, are there some key takeaways that the listeners you would expect the listeners to get from the book?
Well, there's several. It's we're a 200-page book, so you're going to get all sorts of different takeaways from the book. I think the first one I talk about is why buying commercial real estate is better than owning any other type of investment. And then I talk about what I call the 6 immutable laws of real estate investing. And by immutable, I mean it's never changing. Is another way of describing an immutable law. And I talk about the habits of highly successful commercial real estate investors, what they are, what I have seen over the years that seems to be consistent with those who are really at the top of their game. I give an example of lessons I learned from investing in one of my loser properties that I think everybody would find of interest and of value. And then because of my background, I talk about how you go about getting the best possible loan for your property. There are some definite do's and don'ts on how you go about getting the best possible loan for your property. And if you follow the guidelines in it, you will do well. And another, talking about crunching the numbers, another thing that you can get out of the book is that I will go through the 6 different types of commercial real estate calculations that every investor needs to know backwards and forwards. And surprisingly, I've found that those people who've taken, there's a quiz in the book, and those who've taken the quiz generally don't do particularly well. They have 2 or 3 of those 6 types of calculations down, but they rarely have all 6. And so I think those are some of the takeaways that I see from this book.
Got it. No, and on the calculations, I'm assuming, do you find with that some of your experience with some of your investors, you mentioned like they may be strong in a couple, are those areas that they've chosen to focus on, or is it just do you have any sense of the outcome of the test there?
Well, I give them a 10-question test, and usually the average on that score is somewhere around 4 or 5. I've never had anybody score more than 8. And, I'm surprised a little bit by that. I really am. But here are some of the, to be knowledgeable in commercial real estate really does require you have a solid grasp of the numbers. And these are the six that I can think of. There might be more, but there's these six. How do you value commercial real estate? That's pretty important to know. How do you determine the loan amount based on a lender's underwriting parameters? Surprisingly, very few people really understand that the lender has certain guidelines, certain rules of thumb for how they underwrite that loan. And usually it's much more conservative than the investor. And because of that, they get less of a loan than they expected. And it doesn't really need to be that way. If you know what the seven rules of thumb are that they use, and they're not all hard and fast, it's a little different from one lender to the next, but generally they're in the same area. If you know those, you'll have a much better understanding of the loan amount and therefore how much equity that you really need to buy that particular property. The third thing is, how do you calculate a property's cash-on-cash return? It needs to be done. That's really important. And then one that almost everybody fails on because they really haven't played with the numbers long enough, and that is, how does leverage impact a property's cash-on-cash return? And it's an interesting challenge to see that you could, if you leverage the property, you sometimes can get a better cash-on-cash return. And sometimes, if you leverage the property, you get less of a cash-on-cash return because it depends on the interest rate and the NOI of the property. So you need to be able to play with that and see when you add more money to the mix. If you leverage the property, have more debt on that property, is it going to positively or negatively influence your rate of return? And then the fifth one I have is, how does the amortization impact your investment? And obviously, the shorter the amortization, the worse your return will be. Well, you'll be paying off the loan that much faster, and some people that's important. And then the last area is, what minimum financial requirements do lenders require of borrowers in order to be approved for a loan? And this is kind of squishy. Each lender's a little bit different, but there's definite financial ratios that they look at. And so I go through all of these in the book, and I try to explain as best I can how these numbers work. And if you know what the answers to these questions, if you know how to make these calculations, you become a much more knowledgeable real estate investor, and it can work it to your advantage.
No, that's definitely useful to know your numbers. And like you say, all of them. I continue to learn myself just on how they work and their importance. I know it's definitely you have to know that. That's good. On the key takeaways there, on the real estate over other types of investments. Is there anything you can share about that as far as?
I'd be happy to. In the book, I go over, there are 7 reasons why owning commercial real estate is better than owning any other type of investment. And I'd love to go through all 7, but we don't have time. But let me give you 2 of those reasons, which I think are unique to commercial real estate. First one is that real estate investors have considerable influence on the outcome of their investments. And they do that in a variety of different ways. They can make capital improvements to a tired property. They can change the management for those properties that are poorly managed. And they can re-tenant a property with better quality and higher paying tenants. And as an owner of any other type of investment, you're a passive investor. You have no influence on the value of your investment. You are at the whims of the emotions that control the market. Let's say you own a stock in Apple. your stock might be doing well, but if the market is on a downward cycle, your stock is going down with the rest of the market. And that happened to me back in 2008 when we had the stock market crash. And I had Apple stock, and Apple stock was doing great until the market turned, and I lost a third of its value overnight. And it had nothing to do with how well Apple was doing. Apple was a successful company, but the market went down, and so did my value in my Apple stock. So that's a perfect example. So that's the first reason. You can, as a real estate investor, have considerable influence on the outcome of your investments. The second one I enjoy talking about the most is that we've all seen those TV commercials where people are asking how much money they think they need to save over their lifetime in order to retire comfortably.
Right.
And their response is, usually it's with a shrug of their shoulders or a bewildered look on their face. They reply, "Beats me." And truly, if your investments are in stocks or bonds or land or precious metals or something like that, that's really an honest response. That is an accurate response. Beats me. But they really have no idea if they will eventually run out of money during their retirement years. There's no way of knowing. But not so with commercial real estate. It's just the opposite. By answering three basic questions, which I go into in the book, you can know without any doubt whether you've saved enough money to retire comfortably. In other words, you could live to be 120 years old, and you'll never have to worry whether you'll run out of money. It's all about living off the cash flow generated from your commercial real estate investments instead of slowly liquidating your stock or bond portfolio. So those are 2 out of the 7 reasons why commercial real estate is better than owning other types of investments.
No, and I love all those. The the potential for real estate is always appealing, and especially when you understand the couple sides there, both the appreciation and the cash flow. That's good stuff. Let's see, what was I going to ask you? So, you mentioned how to go about getting the best possible loan. Can you speak to that just briefly?
I certainly can. As a mortgage broker, I've learned all the tricks of the trade over the last 35 years. But there's only really 3 ways you can go about getting financing, and they're real obvious. Everybody knows this. I'm just stating the obvious, but I need to do that, I guess, to get started. Is that the first way you can go about getting financing is going back to a lender that you've already done business with. The second way is you can shop the mortgage market on your own. Or 3, you can employ the services of a commercial mortgage broker. Those are really your 3 choices. And in the book, I go through the advantages and disadvantages of each of these options. Now, I admit right up front, and I do in the book as well, as a commercial mortgage broker, I'm biased. I believe using a mortgage broker is by far the best possible choice of the 3. But if you decide to shop the market on your own, I lay out a step-by-step plan for how you get the best possible loan for your property. But here are 4 reasons why I believe employing the services of a mortgage broker is the best alternative. Now, you can listen to my 4 reasons and take it or leave it. But these are my 4 reasons. 1, the mortgage broker, he knows more lending sources than you do. I mean, that's what he's in business to do. So he knows which lenders are interested in your property type. He knows which lenders have the most competitive rates and terms. It's his job to know. So that's the first reason. The second one, he's already established a good working relationship based on trust with his lending sources. They know each other's idiosyncrasies. And by the way, these lenders do have their idiosyncrasies, believe me. And because of a prior relationship with them, or the mortgage broker has a much higher probability of getting the loan closed than if the borrower goes directly to the same lender. Let me say that again. The borrower could go to the lender and may get turned down or may not have as an optimal outcome as if the mortgage broker took the same loan to that lender because they know each other, they speak each other's language. He can address all the strengths and he can mitigate all the risks. And because of that, he has a much higher probability of getting the best rates and terms for his client. Third reason is that compared to shopping the market on your own, this option takes significantly less time and effort on the part of the owner. I mean, your time is money. And if you're spending a lot of time, especially spinning your wheels trying to find a lender, you don't just Google lenders and find the right lender for your property. It doesn't work that way. And finally, probably the most important, it only happens occasionally during the process, but it does happen occasionally. Once or twice a year, I might have to do something like this, maybe not that often. He is your best advocate. A mortgage broker is your best advocate if things go wrong. If the lender wants to keep the mortgage broker happy because he brings them deals on a regular basis. So let's say that for whatever reason, the loan outcome isn't what we wanted. The lender is much more concerned with keeping me happy than he would be with keeping the borrower happy, because I bring him multiple deals. And this particular borrower, this might be the first time he's ever brought anything to them. So they will want to keep me happy, and they will try everything they can to get me satisfied, or they know they're going to lose my business. So they don't want to do that. They could lose one particular one-off transaction from a borrower, but to lose the production from one of their trusted mortgage brokers is something that will impact them, and they know that, and they will try everything in their power to keep me happy or keep the mortgage broker happy. So those are the 4 reasons why I think having a mortgage broker versus trying to do it on your own. But again, in this book, I go through and lay out exactly what you need to do to be able to do it on your own if that's what you choose to do.
Well, I like that the value of the relationship. It sounds like that's the power there, which I'm certain is more valuable, especially in more difficult times than when money's fast and free and everybody's got money to lend kind of thing. So definitely some good points. Without going through the whole book, where can listeners go to find out more, to connect with you and learn more or grab a copy of your book?
Well, they can go to my website, and right now the book will be coming out supposed to be coming out right about now. And it'll be on my website for sale there. It's not going to come out into the stores until September on the ebook version, and the hard copy version will come out in December of this year. So I would encourage everyone to go to my website, which is www.marshall, my last name, cf.com. And if they go there, you can click on the right tab, and it'll take you to the opportunity to purchase the book.
Got it. And for the listeners, I'll have a link in the show notes to that as well, so you can click on that. Doug, thanks for taking the time to talk. I'm excited to see your book, and as always, I've learned a lot.
Well, thank you for having me.
You got it. For our listeners, if you like the show, share it with someone you know, because the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.